It's a strong day for the gold prices, which have climbed nearly a percentage point to its highest in nearly 2 weeks on soft US data, and as holdings in the ETF SPDR trust rose for the first time in 2 months. Meanwhile, China's consumption for gold in the first 6 months of the year surged by more than half as sliding prices of the metal lured buyers. Data showed, reinforcing expectation that the nation will overtake India as the world's top gold consumer this year. Let's take it to the experts then, and we are now joined by Shiv Srivastav, who's Managing Director and CEO, iGuru Research and Advisory. Also joining us in studios is Vijay Bhamwani, who's author and CEO, BSPL India. Vijay, hi, let's start with you first. And the kind of gains that we have seen come back in case of the base metal prices does say something. The Chinese data, all of it in the previous couple of weeks has been on the positive side. Would you say that there's more gains coming in from these levels?
I think so, Manisha. There is a possibility of some more gains coming in, though I was expecting some kind of a profit-taking reaction in the morning or very early afternoon. And I'm somewhat pleasantly surprised that metal prices are ruling firm, whether they are ferrous or non-ferrous. So, as I talked about last week, the markets are increasingly focusing on the good news from the US economic data points, and if there's any kind of weakness emanating from China, not that we have any fresh bad news coming in from China yet, but the markets are tending to basically overlook any kind of weakness or concerns on China and focusing back onto the developed economies. And because of that, I think risk appetite is likely to expand in the coming 1 or 2 trading sessions and lead the prices higher.
Vijay, nickel above 900, how does that look on charts?
Manisha, I'm frankly a little surprised. I was expecting 905, 906 to be a level where profit-taking would come in, but prices are rallying higher. Although I do hold long positions in nickel, I am unwinding longs at the current juncture, because I think given another % or so, nickel would then become ripe for a technical correction. I would prefer to buy at lower levels, possibly sub 900 levels. Of course, I'll want to wait for the price, volume and open interest correlation to give me a buy signal at that point in time before I would plunge in. But for every 0.5% to maybe a % rally from here, I would unwind my longs.
Shiv, what's your sense coming in? Because the base metal prices have really turned around. The Chinese PMI numbers to manufacturing numbers to trade data, all of that has really come in positive.
Yeah, you have seen base metals are very good bounce on CX because of the rupee depreciation, but I think that upper level will be capped as we think dollar index is very high. I think that upper level will be best for selling level, and I think copper is the most suffer 448. I think is the best level to sell at this level. I think expect a downside in coming days.
Shivwood, how would you look at the copper prices now? Because 450 is within reach, and that's a level most of the people were talking about. Do you see that sustainable, achievable?
No, I think that 450 is the best resistance. I think the market will correct at this level. I think 450 is the best level to sell, and one can stop loss at 454. I think price will be come down to 440 in 1 to 2 days.
Let's talk about the energy space now, where we have seen some bit of a consolidation coming in, especially for natural gas prices, Vijay. We did see those levels, but 197, 198 seems to be holding right now.
Absolutely right, Manisha. I think 194 as a floor is a significant, meaningful support, and I would expect the bulls to be able to defend that. Not that I'm expecting the prices to decline necessarily to 194 levels, if at all. But I think 204 in the absolute near term would be a resistance to watch out for. If the bulls manage to take the price back up above 204 levels, the probability of 208 to 210 remains open again. And I think natural gas could be a high-risk buy on dips to the sub-200 levels all over again, provided you're willing to wait and fund that position in case there's choppiness in the prices up ahead.
2.5% of an uptick coming in for natural gas M6 prices. Shiv, how would you look at the crude prices? Because 6,400 seems to be holding in that space too.
Yeah, we have seen crude prices trading at 106. I expect 108 is a major resistance and will come down in 1 to 2 days. As per my opinion, one can buy crude at from 20 to 30 rupees down, and I expect that in evening it will go up to 50 to 60 rupees upside.
Shiv, also, what's your sense now coming in for the gold and silver prices? Because that space really has done quite well today. We've seen international markets gain up by 1%. The gold prices in India are also 400 rupees on the higher side. And it's broken above 43,000 rupees for silver as well.
Yeah, I think gold will go up to 28,800, and then after I will expect that will a minor correction expected. The main reason behind is rupees is depreciating very low and is trading at 61.28. I think 200 is a more room for gold to go to upside.
Vijay, what's your sense, especially for silver, because 42,700, 600 was a resistance for the longest time. 43,700 is the level we saw today.
Manisha, I was waiting for a breakout which has occurred, and the prices are basically trading above this threshold. The 42,500 and then 42,800 both have been taken out very, very convincingly. Now we are back above 44,000. So my guess is 45,200 could be around the corner, but there could be higher volatility till the time we reach 45,200. I think it's a buy on dips, more so for the delivery-based buyers rather than leverage buyers. I have been off the leverage space for the last 8 months, and I still remain off the leverage space. I think it's a good opportunity to nibble into the counter in a very calibrated and deliberate manner in the physical delivery segment.
Well, almost 4.5% of a gain coming in for silver on the MCX counter there. We'll also get in a view from David Lamb. He's MD Jewelry, World Gold Council, and he joins us on the show. David, I welcome. A government regulation mandating jewelers to export 20% of their imports came out recently. What do you think the kind of impact this will have on the Indian industry?
It will take some time for us to assess really the long-term impact of any legislative change. The data that we are about to analyse and receive on consumer demand for the second quarter, for the peak first half festival season for gold jewellery in India, actually shows that very little can dent the fundamentals of consumer demand. We're now anticipating that next week's data will show an increase in jewellery demand that could exceed 40%, possibly even approach 50% year on year. And that is one, I think, demonstrative proof of just how strong the fundamentals of consumer demand remain, and just how challenging it is for any government, I think, to manipulate a complex industry when they are restricted to supply-side legislation.
David, what's the way forward for gold prices in India? Because there's so much of movement in currency happening, the international prices also are so volatile.
I think perhaps the most interesting thing from a consumer perspective for gold prices is that we've just come out of a quarter two, where the average price for gold in Indian rupees was 9% lower than a year ago. Consumers had a long period of time to habituate themselves to prices that approached 30,000 rupees for 10 grams. And so when the price adjustment occurred in April, very many consumers saw that as a buying opportunity. That price fall has released a very considerable pressure of latent demand. And again, this leads to a very strong short-term performance for gold, almost irrespective of other changes that are happening in the industry at large.
David, also, how do you read the Indian government's policy regulations on gold that we've seen in the recent days? Do you think it's on the right path?
One of the issues, I think, that is currently informing industry conversations about gold is the impact that may have on the manufacturing and retailing industry here in India. And I certainly think that's worth close examination, because as we know, up to 2/3 of gold imported is essentially a raw material for a very important industry within India. Tens of thousands of artisans making beautiful pieces of jewelry, retailers selling that with imagination. And there is certainly concern that their oxygen, their raw material, is going to be challenged. So again, I'm sure part of the government's complexity here is to examine all the moving parts rather than just to contemplate one aspect of a highly complex industry.
David, another thing that the gold prices continue to follow is the Fed tapering news. What do you think the news can come out, and what would be the impact of the same on the prices of gold?
These are early days for the Fed, I think, to see how the American economy is responding and whether the growth that that we're seeing, and certainly reflected, for example, in the sales of gold this last quarter. We're seeing the second quarter of consecutive growth for gold in America, those first 2 quarters since the crash of 2008 as further proof of green shoots. I think it's quite early days to speculate as to whether indeed the oxygen of quantitative easing will be challenged. So I would hesitate to make a confident prediction there, other than to say that the consumer demand for physical gold in America is again proof that in a modern financial architecture, from a personal perspective, gold has a strong story there.
Final question, David, before we let you go. And what has been the investment scenario really for gold? Have you seen it go down in the recent times?
Investment demand for gold in pure investment terms is the minority part of the Indian market. Last year, 64% of all the gold consumed by Indian consumers ended up in jewelry form. That's part of your country's obsession, addiction, love of the yellow metal. And indeed, the majority of so-called investment products may well indeed be sold through jewelry distribution, and those coins and bars may in some form and at some point end up as jewelry. So before we look at investment as a category in its own right, what we have to remember is that Indian women regard jewelry not just as the ultimate form of adornment when that jewelry is made of gold, but also as an investment story in its own right. The pure investment category, therefore, is contained within India, and we're seeing in the second quarter, again, a fondness for physical gold informing consumer behavior.
Fair point, David. We'll let you go at that. Thank you so much for joining us. That's a view coming in from David Lem, MD World Gold Council, on what he feels about gold investment and prices as well. Okay, let's do a check on the agro-commodity space now, where you have seen a good rebound coming in for pulses. Remember, the chana prices have been trading quite choppy in the previous week, but today we have seen a good amount of a turnaround coming in for that one. 2.8% up on your screens, 2945 holding on to that one. Not just chana, if you look at the edible oil space, that also has seen a turnaround coming in, 0.5% to 1.5% of a gain coming in for soybean and soy oil prices as well. On your screen, 675 plus kind of levels are back into that space as well. Soybean, in the meanwhile, has seen more than 1% of a decline coming in. Very choppy trades continuing into that one. Some consolidation and stability, though, is coming back in case of the wheat prices. We have seen 0.25% and 0.5% of a gain up coming in that space on an everyday basis in last 5 or 6 sessions. On your screens, 1590 is where that one has come to right now. Vijay, what's your sense now coming in for the chana prices? Because it clearly is holding the kind of supports you were talking about. But would you come out and say a buy signal now?
And that depends on your risk appetite, Manisha. It's a very high risk buy at this juncture. I think the 2,611 levels that we talked about in the September future series are holding, and of course we are now at 2857 odd levels in the September futures. But to buy at the current juncture would be fraught with risk, because I would expect volatility to take the prices both ways. Comfort levels would be closer to 2750 to maybe 2780 levels. It's seen a low of 2783. Should it go slide past slightly below that level, maybe yes, I would feel comfortable, provided the price, volume and open interest warranty such a action. Failing which, I would want to see the next 2 or 3 trading sessions as to where the price closes, along with what kind of shifts in open interest, because we are now edging closer to the expiry of the August month futures, and it's a truncated weed also. So give me 2-3 days more and I would be able to have a clearer call on this counter.
Shiv, what's the sense you're making for soybean prices? Because we started the day on a positive note, and while soy oil is holding higher, soybean seems to have really gone down.
Yeah, I think soya will go up in coming days. As we've seen that the festive season is going on and it starts from September. As far as soybean is concerned, I think some minor correction is expected. I think price will go down up to 2990. One can buy at this level, and I expect in coming 10 to 15 days it can cross up to 3100.
Shiv, also, what's your sense coming in for spices now, especially jeera, where we've seen a lot of choppiness? Would you see further declines for that?
Yeah, I think the Jeera will be go down further, and its current level from 200 to 300 level. One can select 13,500 level September future ended. Price will go down up to 13,300 in coming days, in 1 or 2 days.
All right. So while there is a couple of sell calls coming in from Shiv there, then soybean and Jeera is something that you could see some more declines on. Shiv, with that, we'll let you go. Thank you so much for joining us.